to the Scaling Japan podcast, a podcast about how to grow your business from $100,000 and beyond in the land of the rising sun.
Welcome to the Scaling Japan podcast. I'm your host, Tyson Batino, and we have Jordan Fisher here on the podcast today. Jordan is the CEO of Zehitomo, a company here in Japan that is a marketplace for local services that connects service providers and people who are looking for things to get done. They have also successfully raised a seed round, a Series A, and a Series B investment here in Japan. And we get to hear from one of the few Westerners who have received large venture capital here in Japan. So it's great to have you on the podcast, Jordan. And could you please introduce yourself?
Yeah, thanks, Tyson, for having me. It's great to connect and be featured on your podcast. So thank you. Thanks for all the listeners who are tuning in. Very quick self-introduction, I guess. As Tyson mentioned, the co-founder and CEO of Zehitomo.com. We're a startup here in Japan. That's a marketplace, really connecting local service providers, so everything from plumbers to personal trainers to photographers, different home services, event services, et cetera, to people looking to book them, right? And so in Japan, you had Town Page, which was the Yellow Pages equivalent, many years ago, and nothing really has come since, despite the world becoming increasingly online. So we're quite excited about the quality of services in Japan being some of the best services in the world, but also disappointed in the fact that some of the lowest productivity in Japan, especially in the services sector, and recognizing that all these intermediaries taking money in place of the professionals who should be valued for the good jobs they're doing. And so we built a marketplace, to bring this market online, to create value and deliver it to the people who are deserving of it. So
awesome. And one of my friends, Menya Hinga, people in the audience are looking to improve their nutrition and fitness. I'd reach out to Menya Hinga, but he seems to be very happy with your service.
Oh, I'm glad to hear that. Yeah, I mean, you have so many really talented, and obviously Menya is amazing, really talented and skilled professionals all across Japan, right? It's traditionally a country of artisans, right? And you're really skilled, whether it be as freelancers or as small businesses. But, these businesses, if you look at Japan, the number one challenge in Japan for SMBs is getting new clients, right? Is how to grow their business. And you often have these, different offline kind of interactions, supply chains, and kind of local communities and stuff like that. But for these businesses who are good at what they do, how do they grow, right? And I think over the last decade, there's been an increased understanding that these businesses need to come online, right? And figure out how to kind of grow their business online. But even if they want to do that, and even if they have smartphones now, you don't really have the tools and resources to do that effectively. And so, I'm really excited to kind of put the spotlight on all this talent that we have in Japan and help them achieve their dreams, their missions, and help them do what they want to do, while at the same time letting consumers like us benefit from being able to connect with all these amazing, talented professionals.
Yeah, and I think a service like yours is definitely needed because there's a lot of talented people out there, like you say, like fitness, plumbing. And should they focus on doing what they do best, or should they focus on becoming a master at marketing?
Yeah.
So I like how you can help people focus on what they love to do and not have to learn all these different skills just to make it.
Yeah, and I think if you look at how we can actually move the needle on productivity in Japan, it's by letting people do more of what they're good at for more of the hours in the day, right? Versus spending the time doing facts or trying to figure out how they're going to make their printouts and other stuff like that.
Awesome. So I know you've received a seed round, Series A and Series B, but for the audience out there, could you explain what a seed round is? And two, can you explain how you got there?
Sure. So a seed round is usually, it's an earlier stage of finance. And there's, you can have your angel round, you can have your pre-seed round, you can have your seed round, different names that people give to this. But generally the series, it's what happens before your Series A. And the Series A is generally when you're issuing preferred shares, Series A shares, so to speak. And so oftentimes the seed is done on a convertible note, for example. In our case, we use the JKIS, which is what founder startups put together and has become pretty common in Japan. Overseas, there's the SAFE as well and other similar instruments. But part of the idea is that, like, how do you put a value on something that hasn't really started to grow, that's really just still in this early kind of seed stage? And so having convertible structure that doesn't kind of create all the class share governance and stuff like that just yet, but is a fair way for the founder to kind of quickly bring on good investors and continue to focus on the product can be really critical for gaining the momentum and being able to kind of invest enough to be able to see if you can make product market fit, if you can kind of pull together some of the key teammates and stuff like that. And the Series A is usually more, hey, like, we have enough of a thesis right now that if we invest money, that it'll turn into more money, right? And Series B and onward maybe is more kind of as you're getting ready to grow, and hey, we have our economics in place now. It's just a matter of scaling marketing, et cetera. So going back to your question, the names or whatever you want to call them in press releases these days, you have hundreds of $1 million seed rounds. This happens to be the first round that was done versus very small later stage rounds, but generally seed would refer to that kind of early pre-product market fit, significant traction stage.
Gotcha. And to summarize for the audience, we did do an episode on angel investment, which happens before seed round with Yuki Shirato.
Okay.
And we'll make sure to link to what JKISS is in the official notes. So I think one term he mentioned was product market fit. So I assume probably half the audience knows that term and maybe half doesn't. Could you elaborate what product market fit is from, let's say, maybe a venture point of view?
Sure. So product market fit is a very important concept, but also a very ambiguous one, because how do you actually have product market fit? And there's different lines of how you can kind of say that works. Like, hey, like, people I don't know are willing to buy the product, right? Or you have retention cohorts that outperform versus certain benchmarks and stuff like that. But generally, if you have an amazing product, but you're selling it to the wrong market, then it's gonna be very hard for you to grow as a business, right? Or if you have an amazing market, but you don't have the right product to sell them, it's not what the users actually need. If you don't have that fit, then it's very hard to grow. Like, how are you gonna build revenue, right? Build revenue when you have users that want the product that you're offering, right? Or the service that you're offering. And with that, then you can kind of grow and kind of build into the total TAM that you want to go after. And there can be different stages of your product strategy and your product growth, i.e. like, this is how we're going to enter the market, but this is how we're going to win it, right? And all those different lines along there. The reason I think it's a very important concept is that you have to have some level of product market fit to be able to drive revenue in any meaningful way, but it's also a very ambiguous word. And how do you actually, it's not like, aha, like, we reached this metric, our retention cohorts are now this, and now we officially have product market fit. It's not quite that simple. And so I think different investors will look for different things, and it's kind of important to just understand your product strategy and that you're actually building something that the market needs and that users want. If you do that, in theory, good things should follow.
Awesome. And in your case, so one thing I'll mention for the audience is TAM means a total addressable market. But in your case for Zehitomo, what was it about you guys that enabled you to get the seed round?
Yeah, so I think in our case, it was clearly a very large market that we're going after. There were multiple examples globally of billion-dollar businesses being built in the space, which helped as precedent. And then there was Japan, where there really wasn't that much going on, right? And when we started off, startups were still, there was more interest in them, but it's not nearly as much kind of capital, as many funds as there are today, kind of aggressively kind of going after it in the seed and the mid to later stages as well. But when we did it, I think the thing that we were probably valued for through all of our stages, not just seed, Series A or Series B, was basically the team, right? I think we were able to attract some really great members and give ourselves a chance of actually executing and delivering on this market. It was also just the market itself. Like, it's a huge opportunity that we're going after, and we can kind of create a lot of value. And I think that's why, not only investors, but I think that's why we were able to attract some really great members, is that they are also bought into our vision and the dream and kind of the future that we can build if we can solve this space. And so, yeah, I think early days, like, just the team and the market were probably the two largest factors, to be honest. And then on top of that, I think we had a good strategy and we had a good approach and we understood some of the intricacies, and we were a different type of bet because we were foreigners, right? Trying to build something in a very domestic market. But I think people noticed was that we are foreigners that have lived and worked all of our working careers in Japan, and that we love Japan and that we're here as long-term residents. And it's people within Japan that want to make Japan even better, as opposed to people from outside trying to say, hey, we should change Japan, which isn't our stance at all.
And just so everyone knows, I have pretty good business level Japanese, but I have to bow down to the master Jordan when it comes to Japanese levels. The guy can speak.
It's there's always another level of proficiency, but yeah, we've ended up doing probably most of our fundraising and stuff like that in Japanese as well.
Yeah, I think that gives a lot of trust. I know you've gotten some capital from some really big investors, which we'll talk about later. But yeah, I also know that a lot of foreigners, entrepreneurs reach out to you. And kind of like based on what you've seen, like, would you have any other tips other than like, let's say maybe having the right team, maybe a good market size, or any other tips you could give foreign entrepreneurs looking to get a seed round in Japan?
If they're going to be foreign entrepreneurs that don't, well, even if they do speak Japanese, if they don't speak native Japanese, if they're going after the market locally, then yeah, they're going to need Japanese in their team, right? And I'd say trying to do the market here locally without local language, honestly, is very challenging. It's challenging enough to build a business anywhere. And then it's challenging building a business where it's not your first language, but then trying to build a business where it's not your language at all, that can be quite the hurdle. And so I think that if you're doing something maybe where your co-founder is Japanese and you're the technical, co-founder, and you're going to be driving the product and engineering, which is going to be a more international team, then that can make sense and it can be great because you can leverage the strengths of an international culture and the ability to attract that type of talent while also having a business partner that can execute locally in the market. But it's very nuanced, right? It depends on the market that you're going after. It depends on what you're trying to build. It depends on the nature of it really being, in our case, local services is very local, right? It's very Japan. And so, versus other business models that maybe make sense to be going after other users across Asia or the rest of the world.
Gotcha. For the next stage, I'm glad to know that you did make it to the Series A stage. Could you tell us more about your journey going from receiving a seed round to receiving a Series A?
Sure. So I think the main thing was in our seed round, we said, hey, this is kind of our concept, right? This is the opportunity that we think we have. And going into our next round, this is our most important KPI. This is the metric that we need to solve. And we're going to invest the money that you gave us in this, and we're going to prove that we can create this value. And it wasn't revenue at the time, right? Or, at the time we were investing in SEO and trying to show that we can kind of create demand, right? Given that the user behavior was to go via search. And so we said, hey, yeah, we think we can kind of 10x our demand by these channels. And that was our thesis at the seed stage. And to get to Series A, the main thing was that we prove our thesis. And of course, it's not easy or a straight line, right? You always set very high kind of ambitious targets, especially when you're targeting, trying to get people in our external partners excited. And so on that journey from seed to Series A, we had to pivot our approach, right? Our original approach with content was bringing us tons of traffic, but none of that traffic was converting into requests, as really in blogs and stuff like that.
Gotcha.
And so that's part of the product market fit. Hey, we have a product that's creating lots of traffic, but they're not needing our service, right? And so we kind of refocused and we changed our structure and our strategy, and we had our engineering team focus all on just the highest leverage things. And after a few months of kind of pivoting in our focus, it's not like the other things we were doing were bad. It just wasn't translating into the value that we needed at this time. Once we were able to do that, then we could prove the numbers, and we went back to our investors and said, hey, remember what we said we were going to do last year? We did it, right? And this is where we are right now. Now we have another challenge, right? Now we have all this demand. Now we need to figure out, okay, how we can, supply isn't keeping up, right? How do we bring the supply online? We have these theses, right? We have these ideas. We're able to kind of slowly bring professionals online and, have a sales team and stuff like that. But if we have more money, then we can kind of accelerate that process and we can kind of start to monetize, all this demand that we've created.
Like what you're listening to and ready to scale your company? Let Tyson coach you and your team to make the jump. You can find more information about our coaching and advisory services at www.scalingyourcompany.com. Now, back to our podcast.
Gotcha. So you had one site down and you needed the money to, let's say, build up the other site. But I mean, that's a pretty easy conversation to have.
Every conversation is always harder than it needs to be, at least in my experience. You're spending years in the trenches, kind of understanding like every single nuance, studying every single platform out there, stalking all your users to try to figure out like, what can we do to make the experience and the conversion rate better for them and stuff like that. And so taking it, extrapolating back out to the bigger picture, it's actually a really healthy experience because it forces you to kind of summarize what you're thinking and actually make sense. and also to kind of reconcile that with some other best practices. But yeah, when you're talking to a lot of investors that are new and haven't been with you on that journey for a couple of years, it's like peeling onions, right? It's like they say this and you're like, oh yes. And then you're going to say, they ask this question and then you respond this way. And so there's a lot of different investors out there. We were very fortunate to have investors that can kind of believe in our vision and saw us on our trajectory and what we were going out and doing. Yeah, Series A to Series B was the exact same thing, which was that, hey, now we're going to 10x the supply side or these other challenges that we have to solve. And we went out to do that. We spent a lot of money the first few months. And then we realized, hey, this approach, it's working to an extent in that we're driving, users, we're driving experience, we're driving revenue. But given that it's not as good of an experience as like it needs to be, we're not going to be able to win the entire market like this. And so we actually pivoted shortly after our Series A to using Speed Match now, which is kind of our auto bidding algorithm on behalf of professionals, right? What we realized was that for professionals that would bid on the platform manually, you have to bid 10 times to get hired once, or for pros, it's a different number of things, but ROI is great, right? If you're going to spend 500 yen to bid, you bid 10 times 5,000 yen to make 50,000 yen worth of on a job. ROI was better than any other platform out there in most cases. However, just the pain of doing that time after time again, in the US or globally, when professionals are a little bit more aggressive in terms of wanting to grow their business, it was just seen as something that you did and you can kind of hustle. But in Japan, that was, we're trying to educate people on a new model and how they can kind of promote themselves. That was very painful, right? So the pros that would continue to use it, or like who could figure it out, were like, oh, this is great. Like I'm making a wonderful amount of money, but we weren't going to be able to be the platform for everybody. And given how fast demand was growing, we really need to be the platform for all professionals in Japan. And to do that, that's when we kind of shifted all of our energy into this auto bidding process. So we can say to the pros, hey, tell us what you do, tell us what types of jobs you want to bid on. We'll take care of the rest. We'll bid on your behalf, right? And then on top of that, if you get a reply or someone hires you, then please follow up with them. And it's a very different value proposition. It's much easier to continue as opposed to the negative psychology of maybe not getting a reply sometimes, even if the ROI is great at the end of the day. And so, you can't use terms like, oh, but this is your ROI and this is your marketing funnel. Those who aren't that experienced with it, right? Larger companies that have a team or somebody dedicated to do that, it can work. But those weren't the challenges that we were needing to solve.
And that wasn't your target audience, right?
Yeah, exactly. Yeah, we wanted to go after these people that were really great at what they did, and we wanted to be their solution, right? We didn't want to we need to educate partially in terms of coming online, but we want them to focus on what they're doing a great job at. So anyway, we pivoted there, and then that was hard because you go through a pivot and a lot of things change, but we ended up proving that could work. And then the experience that the pros had was fundamentally different. And we had a lot of really great experiences in the platform. And then our retention cohorts were completely different. And we could benchmark that globally and be really proud of what we were doing and perfect. But we also then figured out how to build a sales team and how to make our unit economics work. And so then for the first time going into our Series B, it was like, hey, we have some demand. We know how to grow it. We have supply. We know how to grow it. And we have our economics all overall kind of in place. And so now it was really, how do we grow and scale that? And that's where basically after our Series B, we then did that, right? We grew and scale. We proved that we had something that was worth scaling. And then we grew, especially the operation to bring the supply side online. That's where we grew our sales team from just a couple people before our Series B to now about 40 people, right? And that's,
oh, wow. I still remember when I think it was 2 or 3 people.
As a whole company, yeah. So the whole company now is over 100 people. It's all just because we figured out kind of the core supply and demand and the economics that allowed us to scale to this point. But now there's obviously the next stage and the next stage. This is for us the fastest way to bring the market online, right? And we needed to build out a sizable sales and success organization to help kind of facilitate that transition from offline to online for many of these talented professionals and help educate the market, but also help facilitate those good experiences. And so now it's really this larger ambition that we have in terms of our product strategy. And I won't worry about all the details here, but for right now, for us, it's more how fast can we invest in the product, right? Product that we have today may meet product market fit by some definitions, but it's not like what we have today is maybe 10 times better than Town Page or the Yellow Pages. But what we want to build is going to be 10 times better than what we have today. And so for us, take our current strategy and then be able to build on top of that and be able to invest on top of that. There's only so many different things that you invest in, right? If you're going to do fundraising, you're either going to be buying time, you're going to be buying product and engineering, right, people, or you're going to be investing in like marketing and stuff like that. And so In our case, yeah, we're not quite ready to say, hey, like, let's just go do TV ads and, spend a lot on marketing and stuff like that. We have our organic has been our primary channel, and we look forward to building a brand aggressively one day. But right now we're really focused on, kind of the product and kind of setting up the stage for the next 10x levers of growth.
Awesome. And I thought it was really awesome that you're able to pivot in a way that kept you in line with your initial mission of, I dare say it, democratizing access to, customers and services, while also meeting the user's needs and also finding a way to also meet the power users way as well. So that's cool that you're able to nail both at the same time. And just to confirm, so like one of the key factors of going from maybe Series A to Series B is you do have product market fit, but also showing that the economics work. Would you say that's correct?
Yeah, in our case, that was really key, showing that our unit economics weren't just a theory, but that we were actually able to make that work. And so from an investor's perspective, they can understand if I put in money, they can see how it will lead to creation of more, right?
Awesome. And I think the other cool thing is, so I know I've met some of your early staff. I think I met maybe your first salesperson, or maybe she was your second salesperson, but it's kind of cool seeing like the company grow, and a lot of them invested their time and energy into, and I think they're seeing the rewards.
I hope so. I think, we're still really just at the beginning of this larger kind of challenge that we're trying to tackle, but I'm quite excited that, every day we kind of reach a new start line. And yeah, there's nothing easy about what we're doing even now, right? I don't feel like we've, by any definition, that we've made it. I mean, if anything, we've been able to fundraise, and we've been able to attract some really talented members, and we've been able to go after, a market that has huge potential to unlock value in society, right? That we're excited about. But it's a huge market, and, we're really still only just scratching the surface of what's possible. So, yeah.
And I mean, I think other people might not be able to relate, but I can relate, is the pain of having to reinvent yourself every damn year. It's like, okay, I made it. It's like, nope, you're still lacking all these skills, or you need to understand more, or you need to be able to process more complexity at a faster speed and make decisions with less information.
I was going to say, I was talking to their founder about this the other day, but every year you kind of realize, or every funding round or whatever, you realize like, oh, this is why second or third time founders are valued that much more by the market, right? Is like the things that you have to go through are like, it's like you can never predict any of that, right? And so going through that and like staying alive, right? And keeping your paths open takes a lot of stamina and a lot of creativity to be able to make it through. And I think that, like every year that we've gone through, like there were numerous times when the normal thing would have been for us to fail, right? The normal thing would have been, as we're doing, funding right after having pivoted and stuff like that, and then maybe not having, everything in the line that we would have liked, right? And having to have all these different conversations, or going to fundraiser Series B right when COVID hits, right? And then, talking to international investors, and all of a sudden that, that fails off and stuff. And so every time there's always, unexpected curveballs that come, but it's, finding ways forward, because by definition, what you're doing in starting up a company is you're trying to change the way the world works, right? In some way or another, right? Which is going against the grain. You have to kind of expect that there's going to be a lot more kind of natural resistance and forces than you think. And there's a lot of people that, you can speak your vision, and people that will want to help you. But by definition, you are trying to change the way that things work. And that is very hard, because the default is just to not break things, right?
And when you hear a lot of success cases, it always sounds like a straight line. But it's a lot of up, goes a little bit down, a little bit up, down, sometimes a little bit more down, then hopefully it comes up. But as long as you're generally moving up and to the right and solving more problems, you're doing the right thing.
Much easier said than done, but yes.
Then I know you're a very busy man, but and I know you get a lot of questions from budding entrepreneurs, but is there any way I could help you, let's say, leverage your time better by using this podcast as a way to answer a lot of the common questions you receive?
Well, I'm always, happy to talk to people in this space or going through challenges. I've benefited from a lot of other people, people that have been more experienced or did this before me as well. So I always love, chances to kind of pay it forward. But yeah, I mean, my message would maybe be two things. One is what I just said right now. I think people underestimate the value of staying alive, right? Most startups do fail. By finding ways to stay alive, doors will remain open, right? And you can kind of open doors that, might normally have been closed by finding the crack or the way to leverage your shoe in there and kind of be able to do stuff. So yeah, again, the normal thing is to fail. And the non-normal thing is to survive and thrive and actually change the world. So really just, not underestimating that. The other thing, when it comes to fundraising, especially at the seed stage and early kind of, pre-significant, revenue attraction, stuff like that, there's more and more investors in Japan and globally now, right? And I think there's, as you have more and more investors, it becomes more of a commodity in some sense, but there's also different investors that differentiate in many different ways. And so what I would just say is that early days, I think a lot of people, self-included, the first time going through it, you get kind of caught up in the terms and the valuation and stuff like that. And the reality is, when you're early days, the valuation doesn't really mean anything, right? It's investors are going to look for how they can kind of get their percentage of ownership that they want to target to justify their investment and their involvement or the target returns they want. But from your side, or from the founder side, like if this investor joins and say they have 10% of the company, are you going to grow 10% faster, at least? Imagine even if they didn't give you any money. So if the investor doesn't give you any money, but just by them being a 10% shareholder, are you going to grow 10% faster? Is your next round, when you do your Series A, going to be at a 10% higher valuation, right? Or raise 10% more money, et cetera? And if the answer to that is yes, then in theory, it doesn't matter what valuation you raise at because it's already makes sense for them to be a shareholder. So any money that you get on top of that is that's icing on the cake. And so I think really good investors I think people say that, hiring employees, right? Your team is one of the most important decisions that you can make. And I agree with that. It's our team that makes us what we are today. But in the worst case, you can exit an employee. It's very, very different to exit an investor who's a shareholder, right? They're really for the long term, right? And so you really want to make sure, especially seed stage, is like, hey, the next 10 years, is this person going to share our vision? Are they going to help us? And are we going to be different and increase our odds of success by them being part of the team, right? And if it's purely just capital that you need, and you're like, I don't want to hear anything from any of our shareholders, and I don't ever want to turn to them advice and stuff like that, then look for a loan, right? Look for other different things. There's other options outside of just equity finance. But I think we've been very fortunate to be surrounded by really terrific investors. I think we've ever had an investor tell us what to do, right? It's always this kind of, how can we help you attitude? And globally, that's the norm, but I think in Japan, that's not always the case. So yeah, I just really recommend valuing, really good investors, over just anybody that has capital. And it's not like you'll always have a choice, but when you do, not to be overly sensitive around the valuation and really just think from kind of first principles of your company and how much faster can you think you can grow or going into your next round with this person as a shareholder?
Yeah, definitely. So the value generation, and so I guess first, and for the listeners, on episode 10 with Terry Lloyd, the episode before this, we talked a bit about loans as a way to finance your company. One other point, like what Jordan mentioned, as in investor bringing value, it's I think one common, if you've seen the show Shark Tank, one common complaint that people write in the comments is that the percentage they ask for is too much. But if you think about it from the point of view, like your company maybe generate $500,000 US in revenue, and if you bring on one shark, just them being in your company 20x's, and if you're just going to give them, let's say 5% just for a 20x, I would take that deal any day.
Yeah, I mean, I think you have to watch out because there are a lot of really bad terms in the market as well, right? There's a lot of, there are people who do try to take advantage of the situation or try to negotiate to, non-savvy founders. And so it's important to kind of go through the term sheet with the lawyer and kind of really make sure you understand what you're doing. But when it comes to if, your seed stage is valuation of X million versus Y million or something like that, that's, I think, not usually the area to be optimizing for. Or if you take the better terms of the better investor, I will go for the better investor. But if it's just a loan, then you're going to want to go for the better terms, right? Or if it's just the capital. And I think the later and later stage you get, the more, capital becomes more commoditized and the, more options that you'll have. So it's, again, a luxury to even have, options in the early stage.
Do you have any tips for the founders listening on how to do better due diligence on the offers?
Mm. So again, in terms of the actual, like once you get to the point of an offer, right, then that's, first, congratulations. But as I was saying, if it's not using a template like JKISS, you don't understand it, I mean, go through it with a lawyer, right? Make sure that you actually understand someone who's startup savvy and who can explain to you what these different risks are. Because at the end of the day, you're signing that, you should know what you're signing, right? And understand the risks and implications. But in terms of kind of the due diligence part, I think that really comes down to who's investing in you. Who's the partner? How are their incentive structure? Are they, like, is this an associate that you're talking to and somebody else is actually pulling all the strings, and how do they think about things, right? If, are they taking a board seat? Are they, what are their intentions to, lead future rounds or be a follower, right? They'll probably be asked as a reference for people in future rounds. I talked to a few people, at least in that company, right, to kind of understand that, investor better, if it is a company or if it's an individual. Have a few sessions with them to really kind of get to know them and understand, hey, like this is a 10-year commitment, right? Generally, and
Longer than a marriage.
Your words,
I'm kidding. I'm kidding. I'm happily married.
But the other thing is to get references from other people in their portfolio company, right? And I've served as reference for people that are considering some of our investors, and I've asked for. I speak to other founders, and people talk, right? And so I think investors generally are incentivized to be good because people talk. Get some references, talk, and make sure that's a comfortable marriage that you're going into.
Awesome. Thank you so much, Jordan. And I guess my last question would be, do you have any asks for the audience?
No, I mean, I think Japan needs more and more innovation. So it's really exciting. I think, this podcast, but also there's more people wanting to do stuff. Hopefully with COVID restrictions lifting, hopefully Japan will can get back on more of the global stage. That would be great. But, I'm bullish on the future of Japan. I think we're all maybe listening to this because we love Japan for many different reasons, even if some reasons may drive us crazy. And so continue loving Japan for the great reasons and continue to try to change the reasons that drive people crazy. I think there's lots of room to innovate and to create value and build the future that we all want to live in. Yeah, if I can be of help to anybody on their journey, don't hesitate to reach out. And if you're looking to join a startup, on the other hand, this podcast is in English, but our team and our focus is globally minded, but is on the Japan market. So if you happen to be fully bilingual and looking to join a startup, you can also message me. Just be excited for the future, I guess.
I'm also very excited. And recently I've been seeing a lot of people like, ex-Microsoft or like foreigners or ex-Microsoft, ex-Google, and just starting their own companies. So I think a lot of exciting things are coming forward. Thank you so much for coming on the show today, Jordan.
Yeah, thank you, Tyson.